Good evening, everyone. Glad to be around again. Hope you're having a good time and hope your evening and trading day went well today. We're going to take a look over at the charts and we're going to see what we can find out based on what happened today. We're going to recap what happened throughout the day. We'll touch point on a couple of key areas to trade and what occurred today and what you could have been looking for as price was happening. You can rewatch the live from today to get that info tick by tick. But we're going to be reviewing that today on a broader scale so that we can prepare ourselves for the next time this happens. So let's head over to the charts. Okay, so today's chart, let's start over at the daily because that's important to see. So on the daily chart yesterday, we had come down quite a bit, right? So we knew that the daily lows on that were going to be important. And we also knew that this bullish order block, or not bullish order block, but down close candle on the way up, we could see this supported here. In the morning, we did see that supported. And what happened the rest of the day? We ended up coming back all the way back up. Our draw on liquidity was still all up here, that 17,089 weekly imbalance there. I think that we can still draw up there, and we might see evidence of that shortly. So on the 4-hour chart, we see that we drew down into this segment here, and over the course of Asia, London, post-London, and as we got into some of the days price action, we knew that there were a couple of mitigation blocks. There's one here that I didn't mention, but there's one here, and then there's another one a little bit higher that was supported by a bearish order block combined with this sell side imbalance here. So we knew that price was likely going to reach up to here, and we had documented that as well in the live stream. That I always keep an idea of where my draw on liquidity is. So taking this all the way up was the first move, and then taking this down to sell side liquidity was the second move. We didn't have to take it all the way down, but when we get down to lower time frames, we'll take a look at that. But just knowing that there was movement to the upside to be had after taking such a big drop down, and then knowing that there were orders that were waiting to get sold here, in addition to smart money selling into here, that was kind of key today. So let's go down to the hourly chart. So we are taking a look at today's price action here. So on the hourly chart, we knew we came in a little after London. London and Asia had risen quite a bit, and we knew that we were likely to reach this, so we had this marked out, bearish breaker there. Makes sense that we traded to the middle of that breaker and then created a rejection block that we could trade to in the future. This changed the state of delivery to the downside, and we had relative equal lows here, and we could use those as a potential first draw on liquidity. We did, and we ended up profiting from that quite a bit. So when we see this, because our overall bias was still to the upside, we could take strength into the upside here. That doesn't mean we couldn't take the shorts. We can certainly take the shorts as well, knowing that there's liquidity waiting down there, and we'll drop down to some of the lower time frame charts to showcase that. But we can kind of see how this mitigation block is really powerful there. We traded back up to it and then have rejected from it twice now. So let's head down to a 1-minute chart so we can see a little bit closer. Another thing to keep in mind here is these two lines, this pink line, these two pink lines here. This pink line was the low at 4 p.m. on the prior day. This line was the opening at 9:30 a.m. today. So we knew that there was going to be a real-time hour gap, and you can see that on the real-time hour chart here. So you can see that opening range gap here from this close to this open. We knew that there was going to be some likely movement down into that area. And we had predicted that it would reach the midpoint at least of that gap. It ended up getting closer to the 75% mark too at the end of the day, but we weren't trading at that time. We had some other commitments. So let's go down to the 1 minute time frame so we can see a little closer what occurred. So keep in mind, today at 8:30, we had unemployment claims, right? So all of this like move up, we were looking for price to potentially take that out. So we had this short-term low kind of documented out already. And you'll see how it just blipped below that briefly and then headed upwards, right? I think one of my trades ended up taking right there. So on a lower time frame, I took this trade, scalped it upwards, and within the matter of a short amount of time was able to exit pretty quickly there. And we knew, since we had taken these sell stops out, we knew once we saw this delivery, we were likely to head higher. Let's take a look at that on a lower time frame even. Where is my... Okay, so here we go. So as you can see on the 1 second, it looks like I'm super late here, which I am, but I'm seeing constant support here, and this breakaway gap kind of helped me confirm that. I actually was trying to get in at that breakaway gap, but it took a while to actually pull the trigger. But on the 1 minute time frame, or 1 second time frame, you can see that we have a change in state of delivery. We head back down into that area, and then we consolidate, heading higher. So because I was looking at that, that's what helped me gain confidence in taking that trade. What do we trade up to? Nothing other than that old mitigation block there. I had some other trades that led up to that point in time, like this one here. I ended up taking that trade up as well. This was one of the bigger trades. And we exited right before that mitigation block. As you can see, we rejected from there. And then we saw a change in state of delivery here, a return back to new week opening, or a return back to SIBI, heads down, stops everything out there, and then heads back down during the New York Open. So we knew that if the New York Open was going to head higher first, like you can kind of see how I got stopped out. I was thinking we would keep going up. So this one was a lot more difficult because I kept on getting stopped out. As you can see, quite messy here. But the real big trade, once I realized I was off sides, so the thing that keyed me off onto this was that on all of these, lower lows kept on being made, but no higher highs kept on being made. We kept on getting lower highs for the most part. So I figured that out really late, and I started to think, okay, well, I must be offsides here because I keep getting stopped out when trying to go long, even though I'm green for a little bit, right? So eventually I realize this and I go short here. I end up taking a large chunk out right at this old short-term low. There's relative equal lows at that time, and I took that as my take profit area. You saw that live, so you got to see me go from red to green on that particular account, and I stopped trading that account once we were done there. And then later on, I do end up taking this once we see a movement upwards. Once we saw this movement here, we saw a short-term high from a key level, short-term high, fair value gap created. I enter here, start to sell out here, and we get another close to $96 in profit there. At that point in time, we're pretty much done. I think on this first account, we do end up trading this last portion over here, and this is a market maker buy model. The key here was this change in state of delivery right when it came down after it got done with seek and destroy. So from 12 o'clock to about 1:30, it was seek and destroy. So lows got taken out, higher highs, lower lows, higher highs, lower lows. And once I saw this signature, I knew that this was probably going to be a change in state of delivery. But what also keyed me in was that we kept on seeing higher highs, but not lower lows. So we removed us out of that seek and destroy pattern, and we started to only see higher lows here. I was skeptical all throughout this segment just because I didn't know it was going to head higher yet. So I didn't know for sure until we started seeing this type of signature upwards. I considered this to be a first stage of distribution, and then each of these being their own stage of distribution. And once I saw that, I started taking longs into this area of distribution with the intent of getting out at this old mitigation block, which we did, and that added maybe $50 to the mix at the tail end of that, using a lower time frame entry, of course. So you can see how we played all sides today. So sell side taken, we aim for buy side liquidity. Buy side liquidity taken, aim for sell side liquidity. Sell side liquidity taken, aim for the next buy side liquidity if you can. And the same thing happened throughout the rest of the day. And in the afternoon, our bias was still to the upside, but we couldn't quite see it as nicely here. I think when I see this in the future, I'm going to think, okay, change in state of delivery. Let's look for longs when we head back into that fair value gap, and then don't even look back. So that is what happened today. Took some simulation trades as well. We can kind of see how we came back to that mitigation block here. For tomorrow, we see that we're consolidating within this range here. So because we're right in the middle, it's going to make it a little difficult to tell. If price is truly bullish, we might end the week aiming for our weekly premium SIBI consequent encroachment. If we're not, and this is just a fluke here, that's kind of like a trade up to get into this bearish order block to trade lower, then I think that we'll see that signature. We'll see that signature when we get back up to around here. Doesn't have to get to the midpoint. In fact, if we get up to it and close above that midpoint, then I think we'll head up to the bearish monthly order block and the weekly premium to be high. If we don't, remember, we're in the last week of December, and we have a week or two in January where we might still see price head upwards, but depending on what happens after then, I would venture to say that we're going to end up seeing a quarterly shift around that time. So that is it for the market recap. Tomorrow we'll take a look live at what happens over the Asia and London sessions. But for now, we don't have a great position here. We're right smack dab in the middle. We can make a case to go up to these SIBIs. We can make a case to go down to these BISIs. Let's let price dictate where we should go next first before we take our next position. So with that, thank you very much for listening and tuning in. And reminder, tomorrow I will not be on live trading. I will prep in the morning, but that will be the extent of me being on video, as I need to actually go back to work. So with that, thank you very much for listening, and we'll catch up soon. Have a good one.